Supreme. You're watching Closing Bell with me, Lovisha Darad. And definitely after starting the day on a stronger note, markets clearly have cooled off from the day's high level. But yes, in the last 15 minutes or so, 30 minutes or so, so to speak, after 2:15, we have seen that the markets have attempted to make a recovery from the day's low level itself. Nifty has made a recovery of about 100 points from the day's low, and even Sensex for that matter, after 2:15, it has made a recovery of about 400 points from the day's low itself. But yes, they still remain below the day's high level, where the markets did start on a stronger note on the pricing in all the easing of the geopolitical tensions, and of course the Trump's remarks on saying that India and US could have a sooner trade deal itself. But yes, the good news comes in given that the market texture still remains in favor of the advances. If you look at the advance decline ratio, that still stands at about 2:1. And sectorally, the picture also looks quite well. If you look at majority of the sectoral indices have been inching in the positive territory, barring your Nifty Realty Index, which is seeing a bit of a profit booking, 0.5% cut coming in from there. But majority of the sectoral indices have been trading in the green. Nifty Consumer Durables Index is also seeing a bit of a pocket of pressure, a percent decline coming in from the consumer durables basket itself. But yes, apart from that, you name it, Nifty Metals, PSU Banks, Pharma, all of these counters have been doing quite well. But yes, let's take a look at how the gainers and losers are panning out from the Nifty 50 index. What has been doing well on the large caps front? If you take a look at the gainers list, definitely you can see Dr. Reddy's has been doing quite well. 5% gains coming in for the counter after the company did report an upbeat set of December quarter results, and brokerages have largely remained positive on the counter. Bharat Electronics also doing well, 3% gains coming in for the counter. Adani Ports, Adani Enterprises, both the Adani Group stocks are dominating the Nifty 50 gainers list. Tata Motors passenger vehicle also showcasing a gain of about 2%. Tata Steel with about 2% gains. Coal India also standing with about 2% gains. But yes, what is not working well in this market and what is not doing well, that's your Eternal, seeing a bit of a loss, 2.5% decline coming in, one of the top Nifty laggards. Of course, it did start the day on a stronger note. Yesterday also, we did see a great breakout for the food delivery maker, but today it's seeing a bit of a losses. Of course, some bit of a caution coming on the street, given that the company will be undergoing some leadership transition where Dipinder Goyal has stepped down as the group CEO but will remain a part of the board as the vice chairman. Titan also seeing a bit of a loss, 1.5% decline coming in from there. SBI Life also not doing well. Eicher Motors, Max Health, all of these are one of the top losers on the Nifty 50. But yes, to understand more about how the last minutes of the trade looks like and how you should be positioned, I'll quickly go across to the technical expert of the show, Aamar Singh of Angel One. Aamar, good afternoon. I mean, we did start the day strong, but clearly we have cooled off from the day's high level. Nifty is still above that 25,200 odd levels, but what lies next?
That if there is a bounce back in Nifty, that's not good. That's very unlikely to sustain. So Nifty could rally towards 25,500, 600 zone, but again, we would witness selling pressure there because the way the Nifty has cracked over the past, I would say 8 to 10 trading sessions, and also some of the technical indicators, they clearly point that there would be a lot of choppiness going forward, and also we have the budget in a week's time or so. So I would say there would be some sort of caution, and also global markets. If you look at the way the global markets have been behaving, it's more or less again consolidation. And if you look at the bullion pack, that is gold and silver, the way they have rallied, so that clearly points that going forward, one needs to be slightly cautious. And at the same time, the trend from a shorter term perspective continues to remain negative. So higher levels will be sold into 25,500, 600. That was earlier a very strong support zone. Now that's become a resistance zone. So any pullback will be used as a shorting opportunity, what we've seen today. But on the downside, Nifty is definitely strongly supported on the 25,000 level. So it's going to be a trading range and consolidation as far as Nifty is concerned. If you look at Bank Nifty, however, has is strong is better placed as compared to Nifty, no doubt about it. But on the upside, Bank Nifty will meet with resistance somewhere around the 59,500, 600 zone. Currently, it's 59,200 or so. So 59,500, 600 on the upside would meet with some sort of resistance there, and the downside, Bank Nifty has got good support coming on the 58,500. So it's this range 1,000 to 1,200 point range for the Nifty for the Bank Nifty, and Bank Nifty is still better placed technically on the charts even from a medium term to long term perspective as compared to Nifty.
Okay, all right. Bank Nifty clearly better placed than Nifty 50 index. And of course, you're saying that Nifty will continue to defend 25,000 levels. So something that we'll be watching out in the upcoming sessions also. But yes, the pain pockets today remains to be your Nifty Realty Index. Once again, seeing a decline of about 0.5%. Amar, what do you expect? I mean, of course, they started this year already on quite a painful note. And today also in this upbeat market, they have been, on the losing end. Do we expect more fall further ahead?
So if we look at the Nifty reality, what we are seeing there is that more or less the pressure is still there. There's no doubt about it. And if you look at the long-term trend for the Nifty Realty Index, that continues to remain negative. So I would say that I don't expect any pullback in a hurry. That's for sure. And even if that is a pullback, that will be more of a shorting opportunity. And the real estate means companies definitely they would witness selling pressure, and any pullback will be used as an opportunity for exit rather than going long, given by the structure of Nifty Reality, which has corrected in the month itself by almost 11%, and the structure from a longer term perspective remains extremely negative.
Okay, okay, all right. But not just realty, but we have seen pressure building up in consumer durable stocks also, Amar. How does the chart structure look like? And of course, anything that you are, mindful from the space here?
So if you look at the consumer durable space, there also we are definitely witnessing some sort of pressure there. But again, it's going to be more of stock specific action, I would say, rather than looking at the industry per se. So it will be stock specific action, and there are definitely some sectors which have been doing extremely well. So I would say rather focus on that. Like for example, the auto stocks are doing quite well. Ashok Leyland, we've been very positive. That's on an upward trajectory. So one needs to be, say, for example, consumer durables or FMCG, or for that matter, real estate. Now, these are sectors which really aren't doing very well, or the private sector banking. If you compare it with the PSU banking space, that's doing phenomenally well. So you have to be more concerned with which are the sectors which are doing well and focus on them rather than being fixated on the market as overall market per se.
Continue to rally ahead. Do you believe that majority of them are already in an overbought zone, or do you see further leg of run up going ahead?
Which stocks? Which sector?
Nifty Metal Index.
See, Nifty Metal, if we look at it, has had a dream rally, no doubt about it. And the way it still looks is very strong. However, from a shorter term perspective, we are seeing now some sort of consolidation, some sort of profit booking, because earlier we saw the likes of Hindustan Zinc, Hindustan Copper, Nalco, Vedanta, Hindalco, all of them rallying significantly. But see, what happens is that at the point of time, there is some sort of nervousness, because ultimately it all boils down to the level of comfort in terms of risk reward ratio. So that also is a concern at the current level. So there is time to be cautious, but overall trend remains positive. If I look at Hindalco, extremely strong on the charts. Longer term, intermediate term trend. Short term, we are seeing some sort of consolidation. So only on a significant correction towards the 900 odd levels, one can look at a buying opportunity. But again, from a shorter term perspective, what's likely to happen in most of the metal stocks is that we could witness some sort of consolidation there. And if I look at for example, Hindustan Zinc. So Hindustan Zinc is still on a strong upward trajectory. We've seen some sort of correction today happening. So on lower levels, it can be a buying opportunity. And because if it sustains above the 670, 680 mark, it would be headed higher. So we are seeing some sort of consolidation in these metal stocks as of now, and some profit booking also being witnessed. But the overall trend still remains positive.
Okay, all right. Some profit booking could be possible in the upcoming sessions. All right, let's talk about some individual movers also of the day. We'll talk about Eternal first. Clearly, the stock is cooled off from the day's high level, and right now the stock is, seeing a decline of about 3% itself. But from the day's high level, the stock has seen a decline of about 8% itself. But yes, coming to you, Aamar, how does the stock look like? Because, I mean, the street did appreciate the Q3 numbers, but it looks like, the management transition is keeping them skeptical at this point of time.
See, if you look at the intermediate term trend of Eternal, it clearly shows that now the stock is going in for consolidation post the sharp and spectacular rally. So we need to always remember that the stock has been a multi-bagger since February of 2023. From almost 50 levels, it rallied towards 370. So it's a 7x the stock has made. So we are witnessing some sort of correction, and also that is extremely visible on the charts from an individual perspective, that now, at least for some time, the stock isn't going anywhere. It's more of consolidation, and the trend is no longer in favor of the bulls. That's very clear for Eternal.
Okay, all right. Some consolidation could be on the way for Eternal. It's something that we'll be watching out for. But since we talked about one of the top laggards of the day, let's also talk about the top Nifty 50 gainer. That's your Dr. Reddy's. The stock has been strong throughout the day. Right now, also, the stock has been, showcasing a gain of about 5% itself. Of course, the strong movement came in after the company reported its third quarter numbers that came in ahead of the estimates. Revenue grew by about 4%. Compared with the market expectations of a largely flat performance, and that was driven by strong growth in the Indian, European and the emerging markets itself. And following this, brokerages have also largely remained positive on the counter, and the street has been quite optimistic, and that's where you can see good movement for the pharma giant. Aamar, a good breakout today. Do you expect the gains to sustain going ahead?
Honestly, if you ask me, Dr. Reddy's really hasn't done anything over the last many months. So because it had a significant rally in December of 2024, and then January of 25, it witnessed a sharp correction. And since then, the stock has gone in for consolidation. So the recent lows in April of last year was around 1,020, and the recent highs in June of 2025 was 1380. So the stock has been consolidating in this range. So 1370, 1380 on the upside is very strong. Resistance on the downside, 1000, 1100, that's a very strong support. So it's more of a range. And if you ask me, if I look at the long-term structure, the stock again isn't going anywhere. This pullback is there, so it could witness some sort of rally on the upside towards 1260, 1280 levels. Sustaining above 1300 and all that isn't going to be easy for the stock. Once the stock starts sustaining above the 1300 level, then we can say that now there is a trend change. Otherwise, the stock is clearly displaying a sideways consolidation.
All right, 1300 is something that we'll be watching out for, and of course, the sustainability of it. But yes, let's move on and talk about Oracle Financial Services. The stock has been doing well. Right now, also, the stock is showcasing a gain of about 3% after the company said that their revenue has increased by about 15% on a sequential basis. And also, the company reported revenue growth of about 10%. Now, this was the first instance in the last four quarters that the company has reported a double-digit revenue growth. Now, despite the implementation of new labor code norms, which has impacted majority of the IT companies, the Oracle Financial did manage to maintain some sturdy margins in the third quarter. And today, as a result of that, the stock has been doing well. Aamar, I mean, the stock is definitely attempting to make a pullback, and today we are seeing finally a good breakout after the months of underperformance. So, what lies next?
You see, Oracle, if you see, it has more than halved. So at any point of time, it was almost 13,000 levels, and from there it corrected all the way as recent as 7,400, 500. So clearly there is some pullback, and fairly so, but I would say it needs to sustain above the 8,000 mark for any meaningful rally. But again, if you look at the longer term charts, they clearly points towards consolidation and a definite lack of trend in the near future.
Okay, all right. That's the view for Oracle Financial. Little bit lack of conviction. That's what Aamar has been talking about. But yes, let's move on and talk about Senco Gold. The stock has been at about flat to a negative bias, despite the board approving the acquisition of 68% stake in August Jewelry. Now, the transaction will be executed through a share subscription agreement and with a cash consideration of about 68 crore rupees. And what the company plans to do is that the Senco's goals, digital and omni-channel strategy is something that they are able to target through this acquisition. Aamar, the stock has been consolidating after a recent breakout. Right now, also the stock has been sideways. Can we expect the range-bound movement to continue then?
Yeah, I think there is selling pressure because if we look at the stock from a longer term perspective, the stock at a point of time used to trade as high as almost 770. That was in October of 2024. And from there, it corrected all the way towards 227. So it was, I'll not say exactly one third, but a significant more than 50%, 60% correction in the stock. And since then, the stock has really not been able to perform. It did rally, but it's not been able to sustain. And if I look at the longer term charts, some of the technical indicators are extremely negative. So what it tells me is that if it bounces back, the bounce is not going to sustain. And for any meaningful rally, it needs to sustain over the 360, 370 on a consistent basis. However, if on the downside it starts trading below the 300 mark, then it could witness anywhere between a 10 to 15% correction further if it breaches below the 300 mark consistently.
All right, 300 is the next support area that we'll be watching out for. But yes, let's also talk about another stock which has been quite range bound today. That's your Hindustan Petroleum, HPCL. Given that the company did miss its December quarter estimates due to the underperformance which was visible in its refining segment. Now, top line was higher than estimates. Even if you look at EBITDA margins, however, the net profit was lower than what the street was anticipating also. And right now, as a result of which, the stock has been down by about nearly 0.1%. Aamar, the stock anyways has been spiraling down and the past month showcases a negative trend. So can we see further fall from the current levels?
See, overall, the stock is inching towards a crucial support zone that's somewhere on the 410, 415 mark. So I would say that that could be a level where the stock could meet with some sort of support and a bounce back in the stock because the correction, if I look at in this month itself, the stock has corrected by almost 14.5%. So I would say that one can wait out, not enter the current levels towards 410 odd levels could be a level for entry. But again, one needs to understand that this stock has now lost momentum. So again, it's a stock which would lack in a particular clear-cut trend, and it could be more of a consolidation which is happening. So 400, 410 on the downside and 450, 460 on the upside. That's the immediate range for the stock over the next few weeks.
Okay, all right. That's the view for HPCL. 410 is something that we'll be watching out, and from there, a rebound could be possible. But yes, so let's move on and talk about one buzzing stock in particular. That's your Vari Energies. Right now, the stock has been showcasing gain of about 9.5%, nearly 10% gains coming in, given that the company also delivered a strong set of third quarter numbers. If you look at from the numbers perspective, now net profit has jumped by about 26% on a sequential basis. EBITDA climbed by about 37%. Margins also expanded to about 25.5%. But yes, sir, the strong performance was driven by the company's highest ever quarterly solar module production and the commissioning of the new module manufacturing facilities, which is why they have reported a good set of numbers. But Aamar, the stock has seen a good breakout after months of underperformance. So does this mark an inflection point?
See, if you look at the stock definitely has corrected because of the last three consecutive months. So the stock from almost 3,000 levels corrected towards the 2,400 level. So now it's inching upwards, and the volumes also have been significant. So it becomes one shouldn't really rush into it because the longer term, I would say they're not the longer term, but the intermediate term trend is still very negative. So what it effectively means is that though the stock has corrected, it could witness a temporary bounce back, but whether the bounce back is going to sustain or not is something we'll have to watch out for. So from that perspective, I would say that one needs to wait and watch at least for the next a couple of days as to whether the stock is able to hold its recent lows of 2,400 because that's going to act as an important zone. So consistently sustaining above the 2,800 level is something which is the first thing that needs to happen if the stock is to rally towards the 3,000, 3,200 levels.
Okay, all right. That's the view for Vari Energies, and we'll watch how the stock behaves in the upcoming session. But yes, let's talk about Bajaj Consumer Care. The stock clearly has hit 20% upper circuit right now. And of course, this comes on the back of its third quarter performance, wherein analysts have, given out multiple target price hikes, given that it did report a good set of numbers, wherein the revenue has risen by about 30%. Operating performance is improved with EBITDA more than doubling, and net profit for the quarter has also jumped by about 83% on a year-on-year basis. So very strong set of numbers, and definitely the street has been appreciating that. Aamar, what's your view? Strong set of results, and the stock clearly has snapped its 5-day losing streak today.
Yeah, I would say if we look at Bajaj Consumer Care, so the stock is from a longer term perspective, it's positive, no doubt about it. Short term, we've seen some very sharp movements and volatility on either side. So from 290, the stock came to as low as 250 odd levels and at 240 odd levels, and then today has been a very sharp up move post the results towards 300 marks. So clearly, it shows that there is a lot of activity happening in the stock, and the stock has an immediate zone of resistance somewhere on the 300. Because if we go back and see on the longer term charts, the stock in September of 2024 had made a high of 290 almost, and then it had corrected significantly. It had halved. Now, from those levels, again, it's back, and recent high was around 310, and from there it corrected towards 240 odd levels. So 300, 310 becomes a very important zone for the stock. If the stock is able to sustain above that level, then the stock is definitely headed higher, and the next level for the stock would be somewhere around the 330 odd level. So sustaining of 300, 310 levels, the stock could witness 10 to 15% on the upside, but that level is very important.
All right, that's the view for Bajaj Consumer. Definitely, the stock has done quite well today. But yes, let's move on and talk about Jindal Stainless, because the stock has been up after it reported decent third quarter performance. If you look at the profit bottom line, that's your 26% year-on-year increase. Revenue has increased by about 6%, and EBITDA has also improved by about 17% on a year-on-year basis. And the stock has been marginally higher, although the stock has cooled off from its day's high level, and right now with about a 3% decline from the day's high level as of now. But yes, Aamar, what's your view? Good reaction to the third quarter results, but the stock has cooled off from the day's high level.
So if you look at Jindal Steel, so Jindal Stainless Steel, which we talked about. So see the stock now it clearly is not going any higher. That's very clear. So anyone expecting a significant rally in the stock, they'll have to wait out and wait out for some significant piece or period of time, because on the upside now it's capped around the 840, 860 zone, which was the recent high. On the downside, somewhere around 720 is a level where the stock could find some support. Recent yesterday's low was somewhere around the 740 odd levels, 735. So 720, 730 is an important zone of support. But it clearly shows that it's more of a range play. So most of the stocks which we've been talking about so far, they are more from a range play perspective. Don't expect any significant trend change happening or a major rally happening in these stocks which you've just spoken about, most of them in a hurry.
Okay, all right. That's the view coming in for Jindal Stainless. And let's move on and talk about another stock in focus. That's your SBI. Clearly, the stock has done quite well today. 2% gains coming in for the PSU banking major. And the stock has also hit an all-time high today ahead of its third quarter results, which will be due on February 7th. But yes, the management has reaffirmed that its margin guidance of above 3% for the second half of fiscal year will be supported by the deposit repricing and the CRR cut. So yes, that's the result of which why SBI has been doing well, and not just SBI, but of course the entire PSU banks has been quite resilient. Aamar, what's your view on SBI, and of course any next target levels that you're watching out for?
See, SBI definitely, we've seen very strong moves, which I spoke about earlier also in the PSU banking space. And SBI definitely has been one of them. Continues to remain very strong on the long term, intermediate term trend. Short term trend is also strong and positive. We did witness some sort of consolidation. But the way the stock is rallying, I would say it's honestly very difficult to say where the stock is going to stop. But on the downside, the stock has got good support around the 1020, 1030 levels, and recent high was somewhere around the 1050 mark. So sustaining of that level, we could witness a rally. and the stock towards the 1080, 1100 levels. But I would definitely suggest that one needs to be slightly cautious.
Okay, slightly cautious for SBI. Definitely, the stock has done quite well. Just 18 seconds left before we get to the close. But yes, let's discuss about one more stock. That's your KEI Industries. The stock clearly has cooled off from the day's high after it delivered a strong operational performance in the third quarter, given that the profitability has surpassed by the street estimates itself. But yes, the stock has seen a sharp breakdown. Aamar, what's your view? KEI Industries?
I would say KEI definitely the stock has corrected from 4600 levels towards 3800. So it clearly shows that the stock is trying to form some sort of support or base. So if an entry is to be looked at, ideally a good entry is somewhere on the 3600 level where one can look at an entry. But again, you need to understand that this also stock is in for consolidation. The no the neither is the trend there for the medium term intact.
Okay, all right. That's the view coming in for this particular counter. But yes, let's address the first last trades coming on your screen. Of course, Sensex has settled with about 470 points gain, 0.5% gains coming in for the Sensex. And clearly, the Nifty 50 index has broken that 3-day losing streak and it has settled above that 25,300 mark. So yes, we were off the day's low level, but in the last 30 minutes or so, the Nifty 50 index has tried to recover from the day's low level itself by about 200 points as of now. But yes, coming to the broader end of the markets, they have remained quite resilient today. If you look at the mid-cap index, a percent gains coming in from there, 800 points gain. On the other hand, Nifty small cap index also showcasing a gain of about 0.8%. India VIX has relatively cooled off, showcasing that there is a little bit of an easing in terms of panic, which was visible in the markets in the last 2 days itself. So yes, on the back of the geopolitical tensions easing, we are definitely seeing that the markets have been reacting positively to it. But yes, on the other hand, if you look at from a sectoral point of view, Nifty Realty Index, like we were discussing earlier with Aamar, showcasing a bit of a decline and could be possible that the index could remain under pressure for the upcoming days itself. But yes, apart from that, you can see Nifty Consumer Durable Index also under relative pressure. But yes, the green shoots of the day emerges to be the Nifty PSU Banking Pack, 2% gains coming in, and of course, good gains coming in from SBI also, given that the stock has already hit an all-time high. Nifty FMCG also doing well. Nifty IT Index also showing some good traction. And if you look at the pharma, metals, both of these stocks have done quite well today. But yes, on the Nifty 50 gainers and losers list, 40 stocks have advanced from the Nifty 50 gainers list and only 10 have declined. But yes, from the gainers list, you can see Dr. Reddy's, towering the list. Bharat Electronics, Adani Enterprises, Ports, Tata Steel, Bajaj Auto, Coal India, Shriram Finance. They are some of the names on the top Nifty 50 gainers list. But yes, on the losing end, it's your Eternal, which has been the biggest casualty of today. Despite seeing an early uptick, the stock has relatively cooled off, settled with about 2% decline. SBI Life also with about a percent decline. Titan, Eicher Motors, Max Health, all of them seeing a decline of about nearly 0.5% to 1% itself. But yes, let's take a check of how Reliance Industries has done today. You can see the stock has cooled off from the day's high level and eventually settled marginally higher. But yes, from the day's high level, the stock has cooled off by about a percent itself. But they have been facing the January blues so far this month also. Aamar, what's your expectations from this big boy? I mean, clearly the stock has been trading at oversold levels. So can we expect a retracement from here on?
The Reliance is at very crucial zone, I would say, because the recent low of 1373, that is yesterday's low. So if you go back earlier also in September of last year, the stock had made a low of 1340 and from there it had bounced back all the way towards 1600 levels. So 1340, 1350, 1340, 1360 is a very crucial zone of support for Reliance. If that is taken out, then we could witness real some a sharp correction. Even on the longer term charts, that's a very crucial zone of support. So I would rather wash it out. If I look at the short term, some of the short term technical indicators, they are extremely negative for Reliance. So that clearly tells me that if there is a bounce back, very unlikely that it's going to sustain. And on the higher side, 1460, 1480 is where the stock could meet with some resistance, or maybe if it could rally towards 1500 level. So it's more of very precariously placed. with 1340, 1360 as very crucial support zone for Reliance.
All right, 1340 could be the next support zone for Reliance Industries. And of course, we're expecting sideways momentum going ahead too. But yes, let's also talk about Rallis India, because this Tata Group company has done clearly quite well today, settled with about 14% gains, given that HSBC had upgraded this counter following its third quarter results. Now, what have they done is that the HSBC has upgraded the counter to buy and has raised the target price to about 300 rupees, which means about 20% potential upside from the current levels. And what have they said is that the company's ongoing business transformation is beginning to reflect beyond the domestic crop protection business, and they are seeing some early signs of recovery visible in the seeds and export businesses, and that's what is keeping them bullish for Rallis India. Aamar, what's your view on Rallis? Clearly, the stock has done quite well today.
It's done quite well today, but if you look at from a longer term perspective, the stock had halved almost from its recent highs. That was in August, wherein it was almost 380 levels, and from there it corrected towards 220. So one needs to watch out this 280 level, because the stock has been trying to sustain over the 280 mark, currently it's around the 270 odd levels. Only a sustenance above the 280, 282 level would mean that the stock is witnessing a trend change, and some important fundamentals are changing on the ground, which could then lead to the next phase of rally, because till the time it doesn't sustain at the 280, 285 mark, the stock isn't going anywhere. Yes, on the downside, definitely strongly supported at the 220, 230 zone. But for any significant rally above 285, then it could witness a sharp rally towards 340, 350 levels, but not before that.
Okay, all right. 250, 285 is the next resistance area that we'll be watching out for. All right, just one last question before we let you go, Aamar. Of course, we're seeing a bit of a rebound today, but anything that you're finding attractive from the current levels, your top picks?
I would say one stock we've been quite bullish on is Ashok Leyland. Continues to be very strong on the charts. Witnessed some sort of correction towards 180, again has bounced back. So this is one stock which one can look at on a correction towards 175, 180 odd levels. And PSU banks definitely is something which one can look at. If I look at Bank of India, very strong. Technically, this is one stock very strongly positioned on the longer term charts as well. It's breached major zones of resistance, so the stock is headed higher towards the 185, 200 level. So this is one stock also one can keep a close watch on. The stock has got very strong support coming around the 155, 150, 155 levels.
Okay, all right. Those are the top picks from the space. And of course, with that, we have to let you go, Aamar. But thank you so much for joining us.
Thank you.
All right, clearly the markets, the Nifty has showcased that, it has managed to break that 3-day losing streak. And, in the past 3 days, we have already seen that Nifty has declined by about 2%. But today, finally, we have seen that Nifty has been able to trim some of those weekly loss, and it has ended with about a 0.5% gain. Above that 25,300 odd levels. And of course, Sensex also up by about 400 points. Also, we have seen that in the first half of the trading session was quite strong, and later on the markets did see a bit of a cool off in the intraday. But then later on in the last 30 minutes or so, we have seen that the markets have clawed back and trimmed some of its losses from the day's low level itself. But yes, we did see some positive reaction that came in the initial part of the trading session, given that US President Donald Trump had backtracked on his tariffs. And of course, he also said in a Moneycontrol exclusive that India-US trade deal could be possible very soon. And he also praised Prime Minister, saying that he's a fantastic leader. So on the back of that, we have seen that bulls desperately did make a comeback today. And as a result of the global markets also being resilient, we have seen a good rally in the markets today. So yes, despite a little bit of cuts, we'll still take it. Bulls still hovering. And of course, Nifty, if you look at majority of the sectoral pockets, that has also ended in the positive territory. But yes, apart from that, let's talk more about markets from a long-term perspective and understand how it looks like. Let's move on with the next guest of the show. Joining me is Sneha Poddar of Motilal Oswal. Sneha, good afternoon. I mean, it's the global commentary which definitely turned markets positive after Davos, given that Trump has tempered his fears on the EU tariffs. And he also indicated that the deal with India is on track. So do you believe that is that enough to revive the confidence, or do markets need harder triggers going ahead?
Hi, good afternoon. So, as you mentioned, that the Trump's commentary has led to the bounce which has been seen today in the market. But we cannot, really rule out the fear because the trade deal is not yet done. So the fear still lingers. However, having said that, at least the hopes are there that soon the trade deal will be finalized. Till that time, the volatility will continue in the market, and moreover, with the the result season ongoing, so the stock specific actions will be seen in the market reacting to the results that come out. And also, with the budget just 10 days down the line, so the news flow surrounding the budget will provide the direction to the market. So one has to given the sharp correction of almost 4-5% that we've seen over the last few days, the bounce back was expected, and probably in run up to the budget, the pullback might continue a little, but it has to be seen whether this sustain going ahead, because post the budget, which is the one of the major event, the true direction will be provided to the market. And also, given the mood swings that the Trump has, and so every day, depending upon his commentaries and how, he takes his negotiations further with regards to Greenland, the geopolitical volatility might continue, and that could have repercussions on the Indian market as well. So from the near term perspective, we cannot rule out the volatility, but from the long term perspective, at least the numbers which are coming out, they really point towards that the things are bottoming out. And gradually, in subsequent quarters, the earnings will pick up gradually, and that will provide strength to the market in over a longer time frame.
Okay, okay. But Sneha, I mean, FIs remain unconvinced at this point of time. Despite Trump's remarks, they continue to be net sellers, and we do have the trade overhang right now. And of course, rupee volatility is also contributing to them being as the net sellers of Indian equity markets. Of course, in the January sole month also, we have seen that FIs have been the net sellers. So, while we were expecting that the third quarter results or even the fourth quarter later on could actually revive the sentiment, but do you think, this is going to change anytime soon?
See, FI's inflows, on a sustainable basis, the inflows can come in only when the trade deal overhang actually goes out of the picture. And moreover, with the budget in the hindsight, so obviously they're waiting for the big event to get over, but also because of the geopolitical turmoil which is happening. That is one of the major reason why, the FIs are staying away. Moreover, in terms of valuation, though we have seen a healthy correction, but still, valuation in comparison to the other global markets still seems to be at a fair levels, and not really, we are cheap to the other markets. So, it's a combination of factors which is actually, delaying this return of the FIs into the Indian markets. However, having said that, it's just a matter of few more months, but eventually when the earnings start picking up, then probably the valuations will start getting justified, and eventually, the FIs might come back, because otherwise, all the global rating agencies and the MNCs are still overweight on India, and India still continues to be one of the fastest growing countries. So the only thing is a valuation which is holding back, and probably once the earnings do return with a bang, then the valuations will get a justification. And so it's just a matter of a kind of more time, kind of a correction which will now take place, and post that the FIs can be expected to be back.
Okay, okay, got it. Sneha, but with the kind of results we are having so far, do you think that it's justifying the valuations at which Nifty has been trading?
So, see, Nifty currently trades at a fair valuation of about 21 times. It's only in case of mid caps and the small caps where the premium still hovers. So, in mid caps, at least the earnings growth are very robust. The premium still gets a little justified, wherein they are trading at a premium of about 20-30%. But in case of small caps where the earnings are very disappointing over there, the premium is still at about 40-50%, which is too stretched when the earnings are especially not there. So this is a major reason why, we seeing a lot of beating down happening in case of the broader market, while in case of the large caps, they still continue to stand at a comfortable levels. The large caps will continue to attract investors money, but in case of a mid and small cap, the pain is likely to continue a little longer, especially in case of the small cap. So one need to have a very selective approach while picking stocks for their portfolios.
Okay, okay, got it. But do you think the earnings downgrades are largely behind us, or is there still room for cuts in FY26 estimates?
So we have been saying this at the since Q2 onwards, the intensity of earnings cut has reduced, and this will continue to reduce further in the subsequent quarters. And in fact, from FY27, we are expecting a sharp revival in earnings in about 14-15%. So definitely the intensity has reduced, and even so far in Q3, the numbers that has come out, they have been largely in line. The disappointments are pretty limited, and so far we have not seen any major downgrades. Hopefully, by the time we end the Q3, hopefully the downgrade intensity will continue to be even further lower.
Okay, okay, got it, got it. I mean, we'll talk. I mean, we had Eternal coming out with its scorecard today, and Motilal Oswal's report this morning highlighted that the company can get drawn to a dogfight despite being a market leader. So my question is like, how does one balance this defending market share versus protecting profitability going ahead?
So see, in case of Eternal, I mean, obviously, they reported EBITDA break even ahead of the expected timeline. So that was a big positive. And there is a fear because the competitive intensity is pretty high in the quick commerce space. So there is fear that the this dogfight might continue, and probably the EBITDA turnaround that we've seen in this quarter, it might not sustain. Still, I mean, Eternal is quite ahead of its competitors, and eventually, I mean, in the near term, we might see a lot of volatility in its earnings, but in the long run, we believe that Eternal, given its first mover advantage, given its scale, and given its strategy, it will eventually emerge as a winner, and it will be able to protect its market share. So, from the long term perspective, we are quite bullish on the company. It's just in the near term, we feel that given the the competitive intensity, the other players might resort to higher discounts and all, which could put some pressure on the operating profitability of the company. But eventually, Eternal will bounce back in the coming quarters. I mean, we have full confidence in the management, and we believe that the strategy will pay out in the long run.
Okay, got it, got it. But so yeah, any top sectoral picks that you have as of now after the third quarter results? Anything that you're overweight, and of course your underweight themes?
So, see, in case of, I mean, so far the numbers that have come out is largely from the IT companies and the banking space. And what we really stand out in the result is the results which have been declared by the PSU banks and the capital market players. So, if we look at the capital market companies, I mean, they have been highly beaten down, and now, this quarter seems to be a turnaround quarter for them after a long time. So one can, there the valuation comfort is pretty high, and this one can definitely look at this sector from the long term perspective, because eventually, if one believes in the India's growth story, so then there's a long, scope of penetration in terms of demat account, in terms of financialization of savings, and thus the capital market companies will continue to benefit in the over the next decade, and this one sector is at the right cusp, we can say, of the upcycle, and this one can really, add one or two stocks in their portfolio from this sector. So if you talk about the top picks, we really like HDFC AMC, which came out with its numbers, and even 361 and Angel One. I mean, all these three companies reported stellar numbers, and one can actually look at any one of them to add in their portfolio.
Okay, got it, got it. But anything that you're remaining on the sidelines for the time being?
See, in terms of sidelines, I mean, I can say that the oil and gas sector, the numbers are a little mixed, and there, we are on the sidelines because there's a lot of volatility in terms of oil, and in fact gas prices both. And given the geopolitical uncertainty, we believe that this volatility might continue. So, oil and gas companies might take some time for revival. So, their numbers would be a kind of a mixed bag kind of number. So, this is one sector which I would suggest to currently stay away from.
Okay, okay, got it. But what about the capital goods company? I mean, ahead of the budget, anything that you're expecting, a pre-budget rally, or even any expectations out of the budget?
See, in case of capital goods, I mean, in budget, what we're expecting is that the government can, increase the, I mean, their focus will be there on the capex, and thus about 10% kind of higher allocation can be given compared to the last year. So if that happens, and along with that, there'll be a lot of focus on the manufacturing-led infrastructure built up. So this could, lead to better order book visibility for these cap good companies. So far, we haven't really seen any major, a major bounce back in the cap good companies ahead of the budget. But 10 days are still there, and probably we might see some sort of positive up move in them. Actually, the major issue why the cap good companies have been struggling so far is the order book visibility is definitely there, but it's been the execution which has been really challenging for these companies, and that is why, they have been struggling for quite some time. Probably in our budget we'll get more clear picture, but we are expecting that probably 10% higher allocation can be given to the towards the capex, because the government has already done a lot on the consumption side. Now it's on the capex side that the action is really required. So there, especially sectors like defense. I mean, under capex, defense, then power and manufacturing led infrastructure. So these are these some of the sectors where the focus could be more on the capex side.
Okay, all right, all right. Something that we'll be watching out for in the budget itself. But yes, on that note, we have to let you go, Sneha, but thank you for joining us. All right, that's all we have for this edition of Closing Bell. Clearly, the markets have been on a strong footing after 3 days of losing streak. Nifty has finally, done quite well today. It's clawed above that 25,300 mark, and even Sensex has rejoiced on the back of the tempered fears of geopolitical tensions. But we'll watch out whether or not these gains sustain in tomorrow's trading session. It's the final day of the trading session, so we'll watch out whether or not the recovery indeed sustains throughout the day itself. But yes, we'll be back with markets tomorrow. So do stay tuned to moneycontrol.com, and thank you for watching.